Okay, good afternoon, everybody. Thank you for being here at this session. Thank you very much. So my name is Paul Chandler. I'm Director of Stewardship at the PRI, and it's a pleasure to be here with you this afternoon. Congratulations not only on making it back after lunch, but also making it to the most exciting panel session of the afternoon. Good energy in the room, that's what we'd like to see. In this session, we're going to be talking about engagement with policymakers or sovereign issuers as that theme rises rapidly up the responsible investment agenda. This session links closely to the plenary debate we have this afternoon, where we'll be asking for investors to debate whether they should be prioritizing engagement with companies or with policymakers or sovereigns as part of a strategy to reach net zero. So in my 4-ish minutes with you here on the stage, I'm just going to be introducing the panel briefly. I will also be offering some observations of what we're hearing from signatories on sovereign engagement. And thirdly, I'm going to surprise you with an entirely enthusiastic and shameless plug for our sovereign engagement on climate change. So please do act surprised and enthusiastic when I get to that stage. So I think at the PRI, the last few years, we've really seen a massive uptick in investor interest in sovereign engagement. We know that investors have been talking to governments as part of their portfolio management process for sovereigns for many years. But what we're seeing now is a real uptick in investor interest in this topic where it relates to environmental and social issues, particularly those system-level issues that we are talking about here at PRI in person this week. Many investors are talking to sovereign issuers because it's a part of their process, and they're concerned about the systemic risks of climate change in their sovereign bond portfolios. We also know, though, that sovereign engagement is being integrated into broader stewardship strategies. We know that for many, there's a recognition that policy environments aren't adequate to see corporate transition, and one way to address that is by engaging with policymakers or sovereigns as a way to try and approach that lack of incentive in the market. We also need to recognize, and it's not part of our topic today, but we do need to recognize the role of corporate political engagement too. The corporate lobbying of policymakers and the corporate capture of policymaking as a process writ large is critical to this story. It's the other side of the same coin. And at the PRI, since 2015, we've been supporting investor engagement on lobbying, particularly climate lobbying. And that's a key part of our 3 main corporate engagements that we run at the moment: Climate Action 100+, Spring, and Advance. And it's also a key part of some of the PRI-supported initiatives like Climate Engagement Canada. But ultimately, not a day goes by where a session like this or a tweet or a LinkedIn post doesn't acknowledge the fact that we need a shift in policy to see a transition in our real economy. We need a stronger enabling environment to allow investors to allocate capital more effectively to the transition. We certainly at the PRI, we recognize our role in this space, and we've been working with signatories over the last few years to help you understand better this environment. We published in 2020 our first guide on how to engage with sovereign issuers, and we're working to update that at the moment. We have also been working with signatories to support the investor policy dialogue on deforestation, as well as the development and rollout of the ASCOR framework. This complements the work we've been doing since 2022 as part of our collaborative sovereign engagement on climate change, which was launched in 2022 as a proof of concept pilot for sovereign engagement and collaborative sovereign engagement in particular. We've been engaging, well, investors have been engaging so far with the Australian government, and that has been, we think, going very well. And I'm pleased to say that we hope to expand that out to cover additional markets in the coming months and years ahead. So that takes us to our wonderful panel today. And I'll shortly hand over to Rainer Berlin from Brandywine Global, who will be moderating the panel and introducing the panelists. just to put this panel in context, this builds on some previous sessions we've done in other years. We've talked before about the why of this theme and why investors should do it. Today is really focused on how. We're talking about the practicalities of sovereign engagement, how to do it, where to start, what not to do, and what can be more effective, or how to be more effective in that context. We're also going to hear from the International Public Sector Accounting Standards Board, which is quite a mouthful, who will cover, among other things, upcoming reporting standards on climate risk for governments that, alongside ASCOR, are a key means for investors to better enhance their understanding of sovereign issuers and support their engagement through that. So this is the point where I surprise you with a plug. Please act surprised. The PRI really does encourage our members to join the collaborative sovereign engagement on climate change. We are, as I said earlier, in the process of rolling out an expansion of that program to cover other markets in the next few months. We are really interested to know how this resonates with you as signatories and get your input as we work out which markets we would like to engage with and how that process should work. So there'll be a number of opportunities to get more involved, including in advisory committees as well as in the working groups engaging with additional markets beyond Australia. As usual with the PRI, the easiest way to find the relevant details on our website is to open your favorite search engine and type in PRI Sovereign Engagement. And if you do that, the first link you'll find will take you to a form to join the waiting list for that engagement. So please, if you're interested in this, do fill out that form and help us understand your interest in this topic. If you want more information, you're welcome to speak to me, to any member of the PRI team, or indeed to Tom Arup, our Head of Stewardship Sovereign Engagement, who's hiding at the back of the room. Tom will be available afterwards as well, or at the PRI stand in the break. So that's it from me. You'll be pleased to know. And on that note, I will hand to Rainer, who will introduce the panel. Thank you, Rainer.
Paul, thank you so much for that introduction. It is great to see so many, I would say, existing relationships, advocates for sovereign engagements, and some new ones too, and to be joined by new and old friends on this panel with me. So I'll start with immediately to my right. I think this is my right. Celine from IPSASB. We have Tongai from T.Rowe Price. We have Graham from RBC Blue Bay, and we have Caroline from Amundi. And as I throw each question to each of my panelists, they'll just give a brief introduction of what their role is in their organization, and then we'll get to the question. But before we start, please, this is interactive, and we truly mean this, and that is the point of engagement. So we have our first Slido open poll for you, which is, what are your organization's barrier to entries for sovereign engagements? And we would love to hear from you. It's going to be a word cloud, and I think we're excited to see what your feedback is and what your challenges are. And that's really what we're going to talk about today. How does sovereign engagement work? What are some of the challenges that we've faced? And what are some of the successes that we've been able to enjoy, and how can we build on that momentum? And one of the most important cornerstones of the investor toolkit, disclosure, and Celine will obviously tell us about what IPSASB is doing, and it is, I think, something that we advocate as investors. This PRI conference, we've seen a number of macro level factors that we need to address. Systemic risk, the real economy, and are there trade-offs between all of the types of engagements that we do? And I mean, we could almost go home at this point. No, they're all interconnected and they're all really important. And I think we should work together to really understand that there are economies of scale that we can leverage. So please feel free to use Slido to answer that question, and then also to pose your own, and we'll leave opportunities for open mic Q&A. I think my mandate when the PRI approached me was to make this Jerry Springer-like. So please, lots of applause for our panelists. You can boo me, but we want to make this as lively as possible. So let's start with Caroline. Please tell us about Amundi and your engagement program and how you approach sovereigns.
So I'm Caroline Lameau. I'm the Global Head of ESG Research, Engagement and Voting. So I'm overseeing the corporate engagement and the sovereign engagement. And it's important because first, the way we are approaching sovereign engagement is embedded in our global effort. And secondly, we need to advocate the nature of sovereign. And it's obvious, it's sovereign. So, you know, the people who are approaching compare with corporate, the corporate, when you are discussing with your board members, they are stewards of the shareholders. Then when you are approaching a ministry or any kind of civil servant, so first they are civil servants, are not the one decided compared with corporates, and then they are stewards on their own population. So we need to have a slightly different way of doing this, that our role there is to convince, yes, but it's to explain who we are, what are our needs. And it's really important, but being very, humble to the fact that our role is only to express what are our needs, but we have less, objective. I mean, we can't say, after 3 years, I will escalate. This is not what we should do if we really want to have a long-term influence. So that's the first thing. Second thing is, when we are discussing with those people, they are sovereign. I mean, they are launching govies, but also they are regulators. So there are multiple hats. They are in charge of the energy mix. And for example, when we are engaging with sovereign, it's not only because we are holding the govies of this country, but it's also because we are engaging with one utilities of that country. And at some point when you are discussing coal phase out, you need to discuss with the sovereign, with the different ministries, to discuss why it's so important for you. So I think when you're engaging with sovereign, you need to have different hats. You need to to discuss with the hat of corporate engagement, like being in charge of the energy mix. You need to see them from a policy point of view and as an investor point of view.
Caroline, thank you so much. Tongai, coming from a very traditional fixed income lens, can you walk us through T.Rowe's approach? And please introduce yourself to the group.
Okay, thank you very much for the question, and pleasure to make everybody's acquaintance. Tongai, head of ESG for fixed income at T.Rowe Price. I work with our investors to incorporate ESG factors across fixed income, so that's corporate credit, sovereigns, securitized and munis. And I also work very closely with our team to enhance our engagement process. Now, to your question, the way we have set it up at T.Rowe Price is we're very intentional around ESG integration, the work we do, but also the sovereign engagement itself, being very focused on ESG factors that we believe over the short, medium, and long term will impact the willingness and ability, in this case of a sovereign issuer, to repay debt. Now, to enhance that process, we work across the team with essentially a proprietary model. It's called the Responsible Investing Indicator Model, which flags to the investors the most important issues. And typically, that's where we pick up our engagement. Now, with your permission, I'll use a live example just to contextualize. One of the issues we found a couple of years ago was our RIM model was increasingly showing across LATAM issuers that are relevant for us that biodiversity deforestation was increasingly an issue. Now, working with Rich Hall, who was the fundamental analyst, he's obviously doing a lot of work around the macro fiscal indicators, which are traditional. But the issue is, as we are sitting there, either buying the $34s or the $54s, which are 10, 30-year bonds, the issues around climate change and biodiversity loss are intertwined. If not corrected, would start having an issue where GDP could start being impacted. And of course, it's super relevant to us as fundamental investors over those 10, 30-year bonds. Now, we then initiated a program of engagement super focused on Brazil, in that issue around deforestation. And we have started to see a little bit of traction, but also we've been intentional around how we bring capital to bear at T.Rowe Price away from the actual sovereign investment. So we've recently stood by a transaction that the World Bank brought, which was very intentionally focused not just at stopping deforestation, which is critical, but also around actually applying capital to already degraded land, and where we start bringing that back into play. Because again, it is critical. These are intertwined considerations.
Thank you, Tongai. And I agree that the World Bank outcome bonds are an important investor tool. And I think we can agree that we all hope to see that market grow. Graham, I am actually going to change course a little bit because I want to thank everyone in this room for already participating in the open-ended question. I think one of the biggest questions we're getting from the audience is access. And we will get into the IPDD later, but first, please tell us about your role at RBC Blue Bay, and then also tell us where the best place to begin is to gain access to civil servants and governments, because I think that's a broad challenge in this room.
Yeah, thank you, Raina. So my name's Graham Stock. I'm a sovereign strategist in RBC Blue Bay's emerging markets debt team, and my particular coverage area is Latin America. And as you say, we've heard a lot about, or we will hear a lot about challenges in terms of access. I think the best place to go for that is your emerging market debt team, because they've spent the last 30 years engaging with governments on a range of topics, traditionally more established concepts like fiscal discipline, debt management, transparency and monetary policy, but also on political risk, on social factors, and more recently, of course, on environmental issues. If you don't know where to find your EM debt team, look for the group with monitors covered in souvenir baseball hats from emerging market election campaigns, collections of random spirits brought home from investor trips, and random candy collections as well. But we've always done it, and so it's not such a big leap for us to be doing that. Now, clearly, if you're corporate investors, if you're equity investors, it is more of a leap, but there are still plenty of access points, particularly finance ministries and central banks, because they understand where we're coming from in the first place. They understand that these macro risks, or if we can trace ESG risks back to macro risks, it's a potential threat to their local capital markets, their issuance capacity in international markets. And even if they don't know the answers, they're often willing to put investors in touch with the people who can. And if the introduction is made by the finance ministry or the central bank, you can be pretty sure that the agriculture ministry or the environment ministry is going to sit up and take that meeting. So I think there are pretty straightforward access points. It's not scary. We find that our counterparts are very happy to talk. Even governments that you might think of as being quite hostile to some of the issues we're raising, they're in many cases just fascinated by the fact that investors want to talk about a topic that they didn't think would necessarily resonate with us. So I think take the plunge, jump in on the topic that you think is most important.
Thank you. I'm going to go totally off script, so I'm sorry. But first, I'll shamelessly plug the collaborative engagements that relate to sovereigns, because if you are an equity investor or a corporate credit investor, that is a great way to gain exposure and I think learn from your peers. So you're welcome, PRI. But Caroline, because you have the experience with corporates and sovereigns, let's focus from the corporate aspect. How do you get involved in those discussions? Like, how do you get those access points? Let's pretend Amundi doesn't have an EM sovereign team.
Yeah, but we do.
Yeah.
But just answering it, I think when you're, even from the EM perspective, yes, you get this interest, but in some time, you have on and off interest, especially when you are discussing coal phase out and climate perspective, depending on where the sovereign is, if they need if they need some debt investors, they will be more open to discussion. If they don't really need it, maybe they will be less open. So the way you are discussing it, you need to bring something to the table. What will pique their interest? And going back to your question with a corporate lens, it's when you are discussing with companies, especially in emerging markets where you have, they are very important in their country, you have really an angle with the governments where you can see, okay, if you won't help your champion, your local champion, get access to the international financial market, you need to ease your policies that way, we think, or at least it will be a piece of advice, and this is the angle. And going back with where we stand from our corporate dynamic, so we had this engagement program on sovereign, which is driven by our coal phase-out policy, where we want to have like an engagement with the utilities, with the local banks, and with the different governments in order to discuss energy mix and what could be the, how they can transform the energy mix to be more in line with the phase-out plan and how they can finance it. And having this dynamic, I think, is very useful and give us some insight on our corporate side. This is, even if we all agree that engagement with government is very important, but it gives you an extra, I would say, a power in your corporate engagement, especially in emerging markets.
Great, so it speaks to that interconnectedness.
Yeah, exactly.
Excellent, thank you. So thank you for the question. I'm going to take one of the Slido questions because I think it's relevant to the next part of our discussion. Like, how do the sovereign engagements work? And we'll start with the challenges because there are many. So Tongai, please walk us through what is T.Rowe's approach, because this question is, how do you prioritize sovereign engagements? Which countries do you choose? And for you, how do you account for a country's unique political structure and endemic issues when you're going to engage?
Yeah, so quite a few questions in that, and thank you for
so many questions.
Whoever asked it, but I think they're very relevant questions. So as I said, look, the way we approach it from a T.Rowe perspective, again, is a very clear and intentional focus on willingness and ability to repay debt. And the reason we set ourselves up that way is, much like Graham was saying, we have a multi-decade experience in various markets. And we find when we go in and we approach those discussions from, look, this is why we as investors who are invested in your existing debt are interested in it, there is a much more willingness to have that discussion, but also there's this real crowding in where typically if we start off at the DMO and the Ministry of Finance, they then bring in colleagues from elsewhere because everybody starts to get why we're interested, why they should be interested in it. So that's one bit. Now, the other element around the political structure and considerations, I think is very relevant. But I also would make the point that it's not always a negative. And again, I tend to want to use examples, and that's something at T.Rowe we are very keen on. Let's use live examples to flesh this out. So Montenegro, for example, for those unaware, it is a potential EU accession country. It is an issuer in the Eurobond market. It is a relatively small country, but one of the things that they need to do to be able to get to the EU accession targets is they need to be very focused and thoughtful around their decarbonization. It principally has to do with the fact that 40 to 50% of Montenegrin generation today is coal-fired, principally lignite. It is legacy Soviet Union generation. Now, the link to the ability and willingness to repay debt is obviously if Montenegro accesses to the European Union, that is very positive macro and fiscal benefits to bondholders. That's very clear. So we go into that discussion with Montenegro, that engagement, giving feedback around why decarbonization is important in that instance, and suggesting practical elements. The World Bank's Western Balkan decarbonization program, they're providing capital into energy efficient generation, into carbon-free generation, EBRD, an agency of the European Union. So we're going with very practical, tangible thoughts. Now, again, it's not always negative. That's a political aspect which is very relevant in that situation.
Thank you. I think this will be a nice seg, Graham, finally into talking about the investor policy dialogue and deforestation. I'm going to throw in a bunch of questions. So Tongai, thank you for working through those. First, let's start with how did RBC Blue Bay and you specifically get involved in the founding of that group and as a co-chair of the entire organization?
Yeah, thank you. To be honest, it was a little bit random, and I'm not recommending potluck as a sovereign engagement strategy. But we were asked by a group of other investors if we were willing to sign a letter in the summer of 2020 to the government of Brazil, calling for action on the forest fires that were raging in the Amazon. And those other investors were mostly European equity investors. And we discussed this. It actually came into our ESG team. They came to me on the LATAM desk, asked me to read through the letter, see if I agreed, and there was absolutely nothing to disagree with. It was an important call and very timely. And so we signed it and thought that'll be it, because often these letters don't lead to very much. But the letter was passed up the chain from the Brazilian embassy in London to Brasilia, across the desk of a few ministries there, and in particular across the desk of the central bank governor, a guy called Roberto Campos. And he looked down the list of signatories and saw Blue Bay's name and thought, well, why on earth are these guys interested in this? They're fixed income investors. You know, they buy our local real-denominated government bonds, they buy our dollar bonds, but what's it got to do with them? And he was genuinely intrigued, and he called us up at Blue Bay and said, why have you put your name to this letter? And we explained the fiduciary responsibility, the worries we had about the outlook for Brazilian GDP, rainfall patterns, crop yields, the livability of Brazilian cities, etc. All the things that this letter was premised on. And he said, oh, that's interesting. I hadn't thought about it that way. Who do you want to speak to next? And we said, well, the Environment Ministry and the head of the Amazon Task Force, who was the vice president of the country at the time. And he said, okay, I'll see what I can do. And we went back to the other signatories and said, we're setting up these meetings. Who else wants to join? And they virtually fell off their chairs. Well, how on earth did you manage to arrange those meetings in the space of 10 days? And I said, well, that's the access that fixed income investors often have in these markets. And unfortunately, we did too good a job, because they then named us co-chair of the initiative. We quickly set up a second working group engaging with the government of Indonesia. It was timely in that case because they were discussing an investment bill that potentially could have wound back some of the environmental protections for the rainforest in Indonesia. So we set up that second working group, and a couple of years ago, as you know, because you chair it, we set up the consumer countries working group. So it all grew from a letter which, again, in many cases doesn't take people very far, but in this case it did. And of course, back in 2020, the government of Brazil was led by Jair Bolsonaro. His team were very unsympathetic to concerns around the environment. But they genuinely found it interesting that there was a different group calling for action on this. We quickly realized that being an international investor group was not particularly helpful, so we brought Brazilian investors on board as well to make the case that this was a market call, and we were just one more voice in addition to all the civil society groups and other activists that were already making the same case in Brazil. So it's been remarkably successful. We now have more than 70 members. More than 70 members, more than $10 trillion in assets under management from 23 different countries, I think it is. And I think the key for us has been that leading it off the investment desk helps. It helps with the access. But it also makes us better investors as well, because we now have these contacts with different ministries that we wouldn't otherwise have talked to. We extended the engagement to the legislature in Brazil, down to the state level, because it's often state policies that make a difference. And so in the process, we've learned a lot about how Brazil works, what does and doesn't work, not just in environmental policy, but more broadly in policy making.
Thank you, Graham. Again, another pivot, and thank you everyone for the questions. Please keep them coming. Caroline, I'll ask you this. Do you need to be a policy expert in order to lead these engagements or participate? What can you tell our audience about how to at least be well-placed and ready to do it?
So hopefully not, because as an investors, we are not policy specialists. I think what is our force and what we are is that we are referencing things. So it's more about discussing who we are, what are our needs, and then listen to the policy. And as you were telling us previously, is going to the learning curve, learning more and more about how this country are designing their own policy, and they will have differences between one country to another. So it's all about knowing what you are targeting and just listening and learning. And it's very different. I mean, you still have this learning curve when you're engaging corporates, but to be fair, there is more commonalities between one corporate from the same sectors. When it comes to sovereigns, every sovereign has its own dynamic, and we have to learn about that. So it's really something that we need to be open-minded to, and it's all about giving the information who we are and why we are doing that, and also adapting ourselves, because they are sovereign, they are their own steward, they are the steward of their own population, and I mean, we have some interests, but at some point we can't go further. We need to accept who they are, and it's really important to have this in mind, because we really have to be gentle. Sometimes we have, at the beginning of the discussion, we have some pushback, especially when you are coming from Europe because of history. So we need really to be gentle and listening to what they are targeting at, what their population wants, and not being too much of, white colonialist somehow, because sometimes you have this kind of pushback from some countries. We need really to be to take the right tone and just explaining who we are representing, and why is it important, but being always gentle with accepting that they may have a different way of thinking and different targets.
Thank you. Fiduciary has been brought up a couple of times, and I do think access to information and supplementing your investment process is critical to that, and engagement is one of the tools that we use. But Tongai, what are your clients asking for at T.Rowe? Is sovereign engagement an expectation as a manager these days?
So I think for us, stepping back, and I think Graham has made the point as well a couple of times, the actual ESG process is foundational for sovereign investors. It is not new to us as sovereign investors. If you look at all the academic and actually practitioner literature, it's very clear how sovereign spreads have moved typically and traditionally on governance factors. Those obviously are part of the broader ESG considerations. But more recently, this nexus between the social governance considerations is again starting to increasingly show through in sovereign spreads. So of course, things like investment in education, making sure we have gender parity and what that does to economic development and how that impacts on ability and willingness to repay debt, I think is increasingly clear in investors' minds. Now, back to the discussion on the environmental side, again, there is increasing evidence why that is very relevant to the ability and willingness to repay debt. So approaching it, I think, from that particular angle is something our clients really have given us feedback that they appreciate. I also think one of the things we are very keen on at T. Rowe Price is being transparent with who we are engaging with. So as part of our ESG annual investing report, you go to the engagement section, you will find who exactly we engage with on the sovereign level, but across other asset classes as well, what the broad topics are. The reasons we do that are, one, obviously, we're trying to hold ourselves to account, but there's also this collaborative element where we all get better together, right? Like I'm a kid from Africa, so I'll use an African saying which many are familiar with. If you want to go fast, you go alone, right? But if you want to go far, you go together, right? From Burkina Faso. Now, putting that information out there and then working alongside some of these collaborative engagement opportunities is something we found very helpful. Our underlying investors has also given us that feedback that, look, this is helpful, we get why you're doing it, and being clear and intentional around that.
Thank you. There's a great question about how we measure impact for sovereign engagement, and Celine, you've been so patient, thank you. But I thought this is an appropriate time for you to tell us, what is IPSASB? It's another acronym, and how can we use this as a tool for our sovereign engagements?
Thanks very much. So I'm from the IPSASB, that stands for the International Public Sector Accounting Standards Board, and we are, think of the IASB or the ISSB, the standard setters who write the standards for public sector entities. So that's governments from all levels of governments, from your sovereigns, your central government, to your subnational, your municipalities, and they report at their reporting entity level. So traditionally, our name is Accounting Standards Board, so we write financial reporting standards to guide governments on how to provide comparable, consistent disclosures in their financial statements. But with the momentum and the call for public sector to start providing disclosures as well, and the important role of public sector in global climate and sustainability development, the World Bank actually issued a call to the IPSASB in 2022 and called upon us to develop sustainability reporting standards. So with that, we're an accounting standards board. I'm a CPA by trade, and so we didn't take it lightly. We issued a global consultation to ask two key questions. First, does the public sector need its own set of sustainability reporting standards, or can we just use the private sector standards? And secondly, is the IPSASB rightly placed to take this role on? And so from the consultation in 2022, we heard very loudly and clearly that the public sector is different. It needs its own set of standards. The private sector standards can be leveraged, and our proposals do take that on. But the public sector has its important dual role, providing its own operations, the essential services that it does and its mandate, but also its policy making and regulatory role. And so that's one side, one question. And then the second question, they did say, yes, IPSASB, you are the right group. You have the experience, the public sector expertise, since we are an 18-member international board from around the world that sits in the public sector or professional practice in the public sector. And so we are the right organization, and we have the established due process to write standards. And so with that, in 2020, I guess last year, 2023, we commenced developing our first sustainability reporting standards. That was just approved in September at our last quarterly meeting in Brussels. And we're looking forward to issuing that for public consultation at the end of the month. So that's just a bit about who we are and what we're doing in this journey to equip in users and investors, and we really are building off of, having useful information for investors, for sovereigns themselves, for others to be able to understand what the risks are faced by sovereigns and public sector entities from a climate perspective, being our first project, and what they're doing about it.
Thank you. And just as a follow-up, are those disclosures going to relate to the Sustainable Development Goals?
So they will eventually. I think we are just beginning our suite of standards, the first one being climate.
Yes.
So we've prioritized climate, nature, and biodiversity as the next project, and also similar to S1, a general sustainability-related disclosure standard. And so the overarching, and then we work with UN and UNDP and others to build our standards, but that would be, long term, and certainly we'll see, because SDGs will what's the next SDGs after 2030? So, yeah.
Thank you for that. Graham, question. What do you ask for in terms of sovereign disclosure that you're not really getting from the countries you engage?
I'm not sure that there's a lot that we ask for that we don't get, because we know what their capabilities are and try not to exceed those. I think the standardization that Celine is talking about is hugely important, because corporates and sovereigns are deluged by requests for information from investors like us who have developed checklists or screening processes and want to make sure that the assets they hold all fit with that. But it could be 10 different checklists from 10 different investors. And that's not fair on particularly emerging market issuers who are often under-resourced, maybe don't have an investor relations office in the finance ministry. They should, but that's expensive. And so filling in individual questionnaires from individual investors is hugely time-consuming. So standardization is very important. We welcome that for sure. That there are other efforts underway. ASCOR is doing good work in this space. And certainly, we wouldn't want the requests from 10 different asset managers to be replaced by 10 different checklists from international accounting standard boards or other entities. But I think that standardization helps everyone. And it doesn't need to be a particularly extensive list of data or requirements. I mean, in many ways, better to start small and expand. But I think the standardization really helps. So we certainly welcome that initiative, as we have others, and try and feed into it where we can.
Celine, quick question. Will that standardization be consistent across emerging markets and developed markets? Will there be any nuances, or it really will be standard across all sovereign issuers?
So the intention is that it would be standardized across all sovereign issuers, but certainly there's the materiality perspective that everyone would apply and consider what's the key risks for your entity. And so just to give a highlight of what the disclosures include, and if those scattered some brochures around the room to give you a highlight and overview of what it is. But essentially, the disclosures are intended to be, as Graham said, standardized, aligned, and we wanted to make sure that it's aligned with private sector established. So we have the backbone of TCFD, governance, strategy, risk management, and metrics that you should expect to see, and then they're key parts of the disclosure. But we've also taken a two-pronged approach. So focusing on an entity's, firstly, their operations, their day-to-day activities. What are the climate-related risks and opportunities to continuing to provide your day-to-day activities, to continue to deliver on essential services and fulfill your mandates. And so that is really, for example, running your schools, running your hospitals. How are you going to be able to do that? Are you facing severe weather conditions or flooding, sea level rise risks as you develop infrastructure? Those types of risks, and sort of an internal focus on public sector entities themselves. And so that's really built on IFRS 2. So aligning with that language, to have that standardization, to build on the evolving, and the developing space and the knowledge that's developing in the private sector, to then bring it into the public sector so that we're all speaking the same language. It's not meant to be something net new, completely different and unique, but that we can leverage the practices that we're learning in the private sector and bring it into the public sector, layered on with our public sector context. So IFRS 2 with a lot of application guidance and examples for public sectors to interpret and think about how that applies to them. And then the second prong is really about that dual role, that second role that public sectors play. And this is really about public policy making, policy setting. And that is not necessarily for all public sector entities, right? Because you don't all have sovereign powers or, you know, the ability to make public policy and run policy programs. And so that is the second prong, where it's really meant to provide disclosures about, you know, what are your public policy programs? Just tell me what are they? What's your objective? What are the outcomes, and sort of how did you make the decisions around that? You know, when we think about transition from phasing out coal, you know, to renewable energy, how did you make those decisions? Are they, you know, what are the trade-offs that you had to consider? How did you think about the other impacts to economy, environment, and people, which is all interrelated, to provide that accountability and transparency on the policies you set? And ultimately, what's the outcomes? What's the results? How are you performing? You know, when we see all the governments making these commitments, you know, national commitments, signing international agreements, what's your actual outcomes? Where's your progress? Show us, you know, the results and outcomes that were intended or unintended, and then holding them accountable to those. So really it's intended for all public sector entities, emerging and developed economies, and certainly tailored for, you know, what is your role? What do you have a public policy role? And certainly if you do, your with responsibility comes greater.
Thank you. So it seems like it will be an effective tool for us to measure governments against their policies and commitments, and then also topics on which we can engage. Caroline, I have two questions for you. I'd love to hear your reactions to IPSASB and what Celine just said, and then also, how does Amundi measure or think about the impact of sovereign engagement?
Oh, that's a difficult question. Going back to your first question, I mean, standardization is key in finance. So, I mean, we will probably value a lot the result of IPSASB. But I mean, how we do measure our engagement, this is a very difficult question. I mean, we all know that measuring our impact, even in the corporate side, is challenging. So I think in sovereign, how we see it, we are at the beginning of the journey. So we are I mean, even though we have been from a financial point of view as an investor doing it for some time on the sustainability, pure sustainability part, I think we are at the beginning of the journey. So I'm not sure we can yet have this measurable impact KPI where I can show to my investors, I did that. And subsequently, this sovereign improve that. We cannot do it on the corporate side. We can see that there is correlation, but causality, we can't prove it. But on the sovereign side is even more difficult because you have all this interaction. When you are back to SOEs, so because we didn't discuss it, this is a part of the, depending on who you are, you would see SOEs as being corporates or SOEs being part of public entities. On the SOEs, maybe you can see better interaction, you know, because they are much more like corporate. So engagement, you will see more the result of all what you are doing. But on sovereign, I'm afraid we are far from being able to demonstrate our impact. But I will say, this is not the point. The point is, as an investors, I think it's part of your fiduciary duty to discuss that matter. You need to discuss it because you need to deal with your risk. So the problem is not the outcome as an investor. The key things is doing things, and after the outcome is, you know, is not your responsibility, especially with sovereign, which is different from corporate engagement.
Thank you, and I think that's a very honest and realistic answer. Just because a country reduces its consumption on coal and you engaged on that topic doesn't necessarily mean you were the direct contributor of that decline. So thank you. I thought your example of tying it to an SOE is also incredibly important. Let's go back to the challenges. Graham, what happens when you aren't seeing progress, either through IPSASB's future disclosures or what Caroline mentioned? How do you address that, and what advice do you have?
I think you have to accept that very often there won't be progress. You know, we're just one stakeholder among many, particularly in sovereign engagement. We're trying to raise issues and highlight the fact that they matter to us, but equally there are other constituencies domestically and internationally who may take a different view. We started our engagement with Brazil on deforestation in 2020. Deforestation fell sharply in 2023, not because the IPDD had been talking to the government for 3 years, but because President Lula was elected at the end of 2022 and replaced Jair Bolsonaro. So, we would love to claim causality, but there isn't any. But at the same time, even the government of Jair Bolsonaro started to think about these issues in a way that they maybe hadn't before, and at the very least had to defend their actions in public fora on that front. So I think it's a mistake to look for the absolutes and think instead about the relative gains that you can make, the different alliances that you can form along the way to push this forward. It's helpful for domestic civil society maybe to know that there are international investor groups who are concerned about these issues, and that's a win in itself, even if the outcomes don't change materially. So I think you need to be ambitious in terms of goals, and humble in terms of how much you can achieve in many of these situations. And it's also a learning process. So when we record our engagements on our internal system, we're engaging for influence, so to change behavior, but also for insight, to better understand how the government process works in these countries, what the obstacles are. And ultimately, maybe it is a deal breaker, but more often it just informs our assessment of the valuation of the government's bonds. So we might decide not to invest, we might decide to invest more, but it's an individual decision rather than something that a group engagement effort should be doing. That's something that we're very clear on. We shouldn't be threatening divestment as a tool, because that's counter to our individual responsibilities as investors to weigh up lots of different factors that go into an investment. Brazil's track record on deforestation was the reason we engaged with them on that, but at the same time they generate 80% of their power from renewables. They have a free and vigorous press. They have a functioning democracy, and lots of other measures of ESG. They perform very well. So we identified deforestation as a topic where we should engage, but we're not saying it's all or nothing. If you don't respond, we're going to walk away. It's just one more pressure point that we can exert.
Thank you. I think it's been mentioned many times throughout this conference, but this year, 50% of the world is going to be engaged in some sort of public election. Tongai, how should investors be thinking about changes in governments, changes in party leadership, and how do you think about that at T.Rowe?
Yeah, so again, a very relevant and important question. So from a T.Rowe perspective, one of the things we are very clear on is democracy in and of itself is integral, right? So the voters' view is really important. And we are very respectful of that particular element. We don't try and insert ourselves in between the actual voter mandate and the actual outcome. But what we do try, and we're very intentional around, is just making very clear why we think certain elements, again, are very relevant to a sovereign issuer, and why they should be thinking through them and be intentional. So I think one of the things Graham also talked about is this, we try and be really thoughtful around this issue of potentially defunding emerging markets. The World Bank, for those who haven't seen it, have done a great deal of work around what is typically called the ingrained income bias, over simplifying, just using blind ESG metrics. There is a potential issue where you could end up defunding certain emerging market nations, which are actually making really good progress, by the way, and end up putting the capital elsewhere. But you're not really being thoughtful around other elements. For example, the consumed versus produced emissions debate. And we just try and step back as part of our entire analytical process. And this is where, for us being, my team and I are actually, as I said a couple of times, really ingrained within the fixed income process and working with our fundamental side to really focus on these issues and avoid unintended consequences, I think would be a way to sort of think about it from our end.
Thank you. Celine, question for you. Would the rollout of these disclosures be subject to any sort of political uncertainty or changes in government, or do you expect that to go ahead?
So the nature of our standards are that they are voluntary. Typically, a national government can adopt them and mandate them for their jurisdiction, but we don't have the power to enforce them. So there is a risk, but are certainly the intent and this is a key question always, thinking about changing regulatory landscapes, but the disclosures should be they cannot only look so far, so they'll still be for the current policy assumptions, but certainly cannot push ahead, but push and look at the next administrations. But I think that the real call for standardization and hearing, throughout the conference, the importance of the investor community and that call to continue to call on governments to provide this information is critical. You are one of the stakeholders, but even in this example in Brazil with the IPDD, to continue to engage and ask for the information will be really the part of the impetus of them continuing to provide the disclosures. But from just like the IFRS, we can't mandate other organizations or jurisdictions to take on the standards. Mm-hmm.
Thank you. Graham, I'm going to ask you this question, and feel free to ask it back to me, because I think we're two of the smaller managers on the panel. So tell us how your team is staffed, who does the engagements, and if you are sub 60 billion, how does a smaller manager compared to like a $1 trillion one participate in sovereign engagements or even launch a program?
We're above 60 billion.
I'm so sorry.
But not much, not much. We do it off our investment desk. So we have an ESG team who provides support and help with policies and structures, if you like, but we do the engagement off the investment desk. And I think that's very important because, for one thing, it makes us better investors. We're learning more about the countries that we're engaging with, but also it means that we have the access. So we will, our first point of contact often is the finance ministry or the central bank, because they're the people that we've been talking to for 30 years. And then if there's a topic we want to raise, they'll often put us in touch with the relevant ministry, the health ministry if it's about reproductive rights, or the education ministry if it's about access to education. And it's about building that network out, which, again, as sovereign investors, we've always done. And so it's not really such a big leap. Again, it makes us better investors to understand how these countries run in the first place. So we try not to sort of silo it and keep it separate, but we do rely on a very strong ESG team to provide us with support in that effort.
Thank you. I really don't have too much to add there. Those responsibilities reside within our investment teams as well. And I know it's not helpful to those that say, well, I'm not on a fixed income desk, and I'm an equity investor, so really how do I get involved? So I guess my answer to all of you would be, think about NGOs, think about supranational organizations, and if there's a specific government agency that you want to be able to engage with, that wouldn't be a DMO, a treasury, or a central bank. And try and find access that way. And again, think about collaboration. I think it's a really useful tool, especially for those that are not well practiced in this area and don't have those traditional points of contact that many of us do from the debt management perspective. Sorry, my mic is slipping off my head.
Can I come in on that one? So,
Please.
So some of our engagement initiatives are homegrown. The IPDD grew sort of organically out of a group of investors who were concerned about deforestation in Brazil. We do a lot of it just bilaterally, particularly on things like budget transparency and data availability. You know, that's something that we feel we can push without needing to build a bigger coalition. But there are other industry organizations that are super helpful. So in the emerging market space, the Emerging Markets Investors Alliance does lots of good work, has different working groups across different streams. I don't think it's just fixed income, is it? I think the equity investors are
That's
welcome
right.
there.
Equity investors are welcome.
So investors who are taking equity exposure or don't have that natural sovereign link, there are plenty of avenues for that.
And there's plenty in IPDD.
Yes.
Yeah, so I mean, we welcome those colleagues as well.
And I think you were mentioning the fact that when you're engaging with governments and central bank, or different ministries, you have different type of people in front of you. So having different, people coming from your organization, from investments, which are used to discuss with central bank, or sustainability people who are more into maybe easier to talk to the environmental ministry or whatever, is really powerful. So, I mean, I think we shouldn't, make the difference in between sustainability team and the investment team, because together we are, one asset manager having this force, and we are engaging together because, with all our forces. At least at Amundi, the investment team is leading the pack, especially from the emerging market. But we are, from our sustainability team, we are bringing our knowledge to leverage their access.
Thank you. And while I still have you, can you talk to us about how you approach escalation from a sovereign perspective?
Yeah, that's a big difficulties is, I think first, sometimes engaging with sovereign is always already some kind of escalation. So, for example, we had this example with some utilities company where we had been engaging for quite some time and having shareholders resolution and some things. And at some point, we figured out that part of the problem was more systemic. So we start to escalate by engaging with the clients and of those utilities, and also engaging with its governments. So it was part of the escalation first. And I think with sovereign, we don't really think on escalating as such, at least for the moment, because, as Graham was telling us, I think you have, a sovereign will have good things and more difficult part. So it's a little bit more difficult. And from an investment point of view, also the universe of sovereign is smaller, especially if you are just doing emerging or just doing developed. And so you have 180 sovereigns you can invest in. It's not exactly the same things as global equity or global corporate, when you will have like 1,000 and you can exclude it and still have a very diversified portfolios. So I think we need to be very, very careful about that, because you can always say, oh, I can divest with this small sovereign, but think of it, how the indexes are made. Are you willing to divest with one sovereign, which is more than almost 40% of your global, you can't as an investors. So I think we need to find another way and being patient and just focusing on discussing what is important for us as an investors, more in this win-win dynamic, even if it's long, even if we don't see the positive outcome, we still need to stick to that. Because sovereign, they are changing over time because of different political landscape, because they have different funding needs, and so on and so forth. So keeping the target, the ambitions, and being humble, as Graham said.
Thank you. Tongai, Caroline brought up a really interesting point, benchmarks. So when we think about the constituents of our most important benchmarks for sovereign bond investors, they typically are G3 issuers. Any advice you could give or experience on engaging with G3 countries versus emerging markets? Do you see any differences there?
So I'm actually going to expand it and tackle maybe G7 within that, because they're all relevant parts of the benchmark. You can even use G20 if you wanted. I do think we need to be very clear around some of the unintended consequences, or maybe even intended for some folks, around just divestment. Because ultimately, there is this real risk that you end up with a situation or a scenario where, we've talked about it a couple of times, you end up starving capital from where it's needed most and where they're actually making decent progress. Now, I think one element at T.Rowe, and again, let's use relevant real examples with your permission, that we have been working on, is to think the layer below the actual sovereign entity, whether it's a G7 or equivalent. In our case, we have a ongoing engagement with the Federal Republic of Germany. And you may ask, why is that, right? The German targets are pretty robust. They are also ingrained at European level. But there's an incongruence to us when you start to look at the federal state level. So for those unaware, the three largest federal states in Germany probably equate to 55% of GDP. If we've got these targets at sovereign level, which are really important and impressive, we would please like to see actual follow-through at federal state level, which is where we have found real traction when we work together with our investment desk. So our rates desk, or in our case, we've been very clear and intentional around why we're doing it, the thinking around energy security, how that could ultimately become an inflationary issue, structural or otherwise transitional, but it's relevant for the rates market. Or in some instances for Germany, we go through the issues around adaptation. I'm sure many folks are aware of what happened a year or so ago around the Rhine, and why that was a really relevant issue for German industrial production. But we're then working at this sub-sovereign level, which is really helpful for us to have that ongoing and continued dialogue. I will also just shout out Tom Arap in the back. They've done phenomenal work on the pilot at Australian level, because it goes across multiple layers, right? And it's very thoughtful and coherent around just being able to do that. And I think that's where we find, for some of the larger, more liquid sovereigns, you start to make reasonable traction.
Yes, and I know you've spoken about it as your whole of government approach as we have prepped for this panel. And I also think that's important, again, if you are not a sovereign bond investor, but you invest in munis, you invest in sub-sovereigns, those are opportunities as well. So thank you. I think that's important to reiterate. You know, I promised that I would do a live Q&A dispersed throughout this entire session, and I haven't. And with less than 5 minutes left, I would be more than happy to take live questions. Yes, in the back. Nick, thank you.
Nick Charvella from CIBC Asset Management. Sometimes when you think through some of these priorities, you might be kind of bringing a different perspective towards, how do you think about reputational risk, especially when you're dealing with emerging markets, taking a developed market perspective to it may be construed kind of negatively by certain parts of the globe.
Thanks for your question. Any initial takers? I don't want to call on you.
I mean, I would answer that, like, we have some of our clients, we have a strong view, on, part of, or on some countries they don't want to have exposure with, so we will accept that. But if the mandate we receive from our clients is to be global, we need to, I mean, we know the risk, but we have to deal with it in a way that I was mentioning. You can't have access to parts of the story and not the whole story. And obviously regarding modern human rights related things, some country might be challenging. But I mean, this is the asset owner or choice to get exposure to that or not. But it's something we need to be very transparent. As long as you want to have an investment which is diversified in the sovereign space, you get those risks, and this is embedded. Because it's not a well-diversified universe where you can tailor-made and being like corporates where you can have
Tens of thousands.
Yeah, 10,000 possibilities. So yes, there is some reputational risk embedded.
But if I may as well, keep in mind sovereign investors by definition are very well versed in dealing with a lot of these considerations. I mean, it's integral, right? If you're doing your actual, I tend to Graham here, who I'm sure be able to speak to this as well. But if you're doing your actual fundamental credit work on a sovereign, I would struggle to understand why you'd want to have a break away from these considerations. I think they're fundamental. They are integral to your actual analysis and investment process. And again, back to the ability and willingness to repay debt, those have shown through time to be very important considerations, I think.
Yeah, no, absolutely. So it's not a value judgment. It's about the materiality of the issue in question. So deforestation, again, to bring it back to that, we think is important in the case of Brazil and Indonesia and elsewhere because of the impact it could have on those countries' future ability to pay. And so we always try and root it back in that. So it's not, and if we choose not to invest, we don't make a big song and dance about it and say we're divesting from country X. We're just saying we don't think there's value in their bonds at the moment. There could be a range of reasons for that. We would not rule out going back into those bonds if they get cheap enough, unless our investors have given us a specific mandate to say, please don't touch country X, which again they have freedom to do. But we're not trying to impose value judgments on the portfolios. That's up to the asset owner if they want to give us those mandates.
And back to your impact angle, is mean that we need to be careful not to be counterproductive, because some of the country where they are less advanced need our support, especially in their transition. And we have to accept that with this exposure comes some risk, but we are more looking at the dynamic, the improvement.
Great, thank you. I would also say that a lot of these markets, not always, across emerging markets and developed markets, want to diversify their investor base. So they don't want just domestic banks and pension funds holding their debt. They want to court international investors. So I think there's an advantage there as well. They need us, and we're trying to deliver risk-adjusted returns on behalf of our clients. So I hope you've learned a lot. Thank you so much for joining us. The applause in the back was our signal that we've run out of time. And I think we'll all be hanging around. And I'd just like to thank my panelists and colleagues. And Celine, thank you so much for joining us and for your work. I think it's incredibly important. Thank you.
Thank you.
Thank you.